Now then, let's take a look at some investment ideas. Yoon Mun Tim is Chief Investment Officer at Prudential Fund Management. He helps run the Prulink Equity Fund, which is the largest investment-linked insurance fund in Malaysia. Has about $800 million in assets under management. The fund up 21% year-to-date. The Kuala Lumpur Composite up 23%. Mr. Yoon, very good day. Thanks for joining us today.
Thank you. Yep. Good morning to you too.
You are a little behind the market, but then you are a fairly conservative fund. What's your positioning at the moment? Do you see more upside, or are you waiting for a pullback?
I think the key to it is that obviously the market has actually run a lot recently. It's actually very, very strongly up. I think the period to judge is actually the whole period of 1 year at least, more on the medium term, longer term, where it captures both the ups and downs of the market. And you will see in that instance that the fund has actually done very well. If you use the Bloomberg figures for 1 year, the Prulink Equity Fund has actually dropped around 2.9% versus the index, which has dropped more than 13%. It's like what you just said, in the sense that the market has actually come up very quickly, very fast recently. And we at Prudential think that a pullback is actually overdue.
Right. How much of a pullback do you think we would get?
Well, I think given that the market has actually done almost like a straight line up since the March time, I think there's actually a pullback of around like almost 5 to 10% would be quite healthy for the market.
Okay, we'll look out for that. In the meantime, some interesting stocks out there. Now, I'm not quite sure whether you're recommending buying these right now or holding on for that dip, but let's look at them. Plantation stocks, they've always been very popular on this program, but they are up a lot year to date. Palm oil, prices up 48% year to date. They've started to ease off. They're down 5% since June. Do you see signs palm oil prices are weakening?
No, I think in the sense that the palm oil prices is actually quite stable at the moment. I think there was a bit of a worry earlier that there will be a lot of supply coming on stream by the end of the year. But you can look around, look out the window, the weather patterns are actually quite difficult to predict. So in the sense that it does have an impact on the fruiting of the trees. And you can see also recently that the stockpile for Malaysia is actually at an all-time low. And also the demand in China and India has continued to be very, very strong. And that will actually lend very healthy support to the crude palm oil prices. In fact, a lot of the analysts have started revising their forecasts up for the year of 2009 as well as 2010, revising their CPO assumption prices up recently.
Okay, well, some of the stocks you like out there, KL, or Kuala Lumpur, Kepong, and IOI, these are two of the biggest producers. Both have done very well year to date, 35% for KL Kepong, 32% for IOI. As we can see, analysts a little bit concerned that price may have run up too far. We've got more sells than buys on both those stocks. What's your call?
I think it's a very interesting point that you brought up, that it has actually run up quite a lot, in line with the market's run-up as well. So in the sense that in sort of like relations to our view on the market in general, we think that one should actually look for a healthy pullback before actually taking positions in stocks like that. In this instance, it's like, yes, it has probably run up quite a lot, but it's also, one must remember that it's actually fallen a lot from the high from last year as well. And a lot of these stocks has actually generate very, very good cash flow, and is actually, in some instances, some stocks pay very, very healthy dividends as well. So it's a stock for the sort of like the more challenging times as well.
Okay, everyone needs palm oil, of course, particularly in Asia. They don't need to gamble, but they do like it. And you've been looking at gaming stocks as well, including Genting, the biggest listed casino group in Asia, also has a stake in MGM Mirage, Berjaya Sports, Malaysia's biggest numbers betting operator, Resorts World, which is 47% owned by Genting, and Tanjong, the tote operator, which also has some power company assets. What do you think about these gaming stocks right now?
We at Prudential like the gaming sector simply because it is actually very, very resilient earnings. At least the earnings are predictable. The earnings are there. unlike some other sectors where the earnings could actually fluctuate a lot and volatility could be very high, and analysts really by and large hasn't got the handle of where the earnings are. Possibly are they upgrading, are they downgrading? In the gaming sector, you then find that the earnings stream is very, very stable, as you rightly pointed out, that it is actually a business that people will continue to be there for the good times and the bad times as well. And in this instance, I think the theme that we have actually taken for the sectors in the sense of plantations and gaming, both these sectors is something that Malaysia is actually quite where there's actually advantage in. Like take gaming, for example, obviously it is the number forecasting business is an oligopolistic business. The casino business and the resort business wrapped around the casino is very much a monopolistic business. So in the sense that take the resorts casino, for example, and in Malaysia, it is actually the only one in Malaysia. Sometimes having a lot of choices like you have in Macau would actually lead to a great difficulty for actually punters to actually come and actually having to select and make a choice. In this instance, in Malaysia, you're actually talking about punters selecting their favorite table.
Okay. Of those four, the one which has underperformed so far this year is Tanjong. I mean, the stock is down year to date a couple of %. So it looks the cheapest. It also has the power companies, which is kind of a hedge in case the gaming industry goes awry. So that sounds attractive, but is it a well-managed company?
It is a very, very well-managed company, as we all know. So it is actually, like you pointed out, a laggard in the market as well. So we find that there's actually very, very good opportunities to actually look at it, not only for the short term, but for the longer term as well, because it has very, very stable earnings in both the gaming business and the power business as well.
Okay, any of the others you like particularly? I mean, Genting at 64% up year to date. Surely it's time to pull back some of that.
Well, in that instance, I think Genting is more a international business. So I think one will have to weigh it, balance it against what you can actually find outside of Malaysia as well. Whereas Resorts World is purely Malaysia.
Okay, Mr. Yoon, thank you very much indeed for your time today. Those are some stock picks in Malaysia. As he was noting, look out for a pullback in the market, maybe 5 to 10%, but look closely at those plantation and gaming stocks.